This is Morning Call, live from CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me is the gorgeous Sonia, Shenoy and Anuj Singhal.
And the handsome Anuj Singhal, maybe.
Oh, yes, of course, goes without saying. Well, the markets at this point in time looking a little under the weather. The cues that we're getting from Asia and Wall Street not looking terribly exciting, but that has not weighed us all these days.
Oh, yes, it hasn't, but it felt like we've been sitting on a seesaw all of this week, right? One up day, one down day. And by the end of it, you get a feeling that we haven't achieved much. I mean, the Nifty is down about 0.2% for the week entirely. But global cues are on the sluggish side because it's been third day running that the US markets ended in the red.
Yes, yes, I was watching the closing bell on Squawk, and what struck, of course, the Chinese data is already indicating slowdown. That's the first thing we should worry about. It's on your screen. But let me just wind back to 1 hour ago discussions on the US closing bell. Caterpillar announced its numbers. Now, Caterpillar is really the company you should watch to see if the world is growing. I mean, they make heavy equipment, bulldozers,
yes,
things, road equipment, construction equipment. If Caterpillar is doing well, the world is investing and there is capex happening. But look at Caterpillar missed revenue forecast, cut its full year sales guidance and announced a buyback. And look at what the chairman Oberhelman tells you. In the absence of compelling acquisitions and little demand for capital expenditure, returning cash to shareholders in the form of buybacks makes sense. And then he goes on to say, I think this is a function of global growth at the rate of 2%. For us to drive sales and drive unemployment, we need at least 2.5 to 3% growth. So this is a 2% growth is the verdict coming from, I think, the person who knows global growth best, because he can feel it in his bones, he can feel it in his order book. Now how does it work for India? Yes. For India, it means that it's going to be lower commodity prices for a goodish bit. If Caterpillar is actually returning money to shareholders, they're not seeing growth in a goodish bit. And secondly, it makes India with its, you can squabble about 7%, the new growth rate, and the 6%, which may have been the old series. But it is still a great growth compared to most other countries. So my sense is this FII money that's trickling in is going to remain there. India is a short commodity, long India play. And India is a growth play in a world where growth is so scarce. So while we may bemoan global growth being very bad, at the moment it's really playing to our advantage.
Okay, we hope it continues like that, because there was a bit of buying that we saw by FIIs yesterday. FIIs net bought about close to 185 crores in the cash market. But I think the domestic institutional selling is something that you need to be a bit worried about for sure.
Actually, that was really my question to Anuj. You can speak about growth and fundamentals, but ultimately everything comes at a price. And the numbers are simply not chiming in. There may be the odd United Spirits which has moved from red to black, or which may be showing a little bit of growth. But basically all of them are telling you that sales is not picking up. Hindustan Unilever gives you the same sense. Asian Paints gives you the same sense.
Also, the slow growth from the US is a matter to worry about, because even if you look at something like Lupin's numbers, over there, their US sales have fallen 16%. I mean, you can say that the US FDA is not giving approvals as fast as required, but nevertheless, US is slowing down, and it's visible in some
you put your
companies.
finger on it. In a situation of global slowdown, India cannot be, growing at all. It is very bad news for India. I'm only saying in the sense of relativity.
Sure.
If money is coming into India, that's because there is a little better growth. Your point is entirely taken. But, valuations is the issue. How much will money come? It's growth will come only if the price is reasonable. Anuj, yesterday we saw the prices falling, but they didn't quite fall to the extent they rose day before yesterday. Should we therefore believe that for the moment, at least technically, the advantage is with the bulls?
Morning, Latha. Frankly, it's
difficult to say.
It's difficult to say. I mean, look, yesterday I said that it would be a red day, and it was a red day. And it's difficult to stick your neck out every day and say that it will happen, because right now you're reaching a stage where this market can make a big move. And this market is not going to stay in this range for a long time. From the recent highs, the market has fallen a bit, but as you said, not much. The worry for the market now is that this volatility is now being accompanied by higher volumes. We have had 3 days of volatile trade now with higher volumes. We had Wednesday, a big down day. Then Tuesday a big down day, then Wednesday a big up day, and yesterday was again a down day. All of that accompanied by high volumes. The question is, has the market texture changed? Because so far, this market has lacked any kind of follow-up to a big move. The market makes a texture if the market has a follow-up. You know, if the down day is followed up by a follow-up selling, or a big day is followed up by follow-up buying. None of that is taking place. Right now, what's happening is you're making money if you're buying on bad days, like you would have done if you would have bought on Tuesday after the decline. And you're making money if you're selling the big rallies, like if you would have sold the Wednesday rally, you would have made money yesterday. So would you make money today if you would have bought yesterday? That's really the big question. And if today the market actually goes lower and seeks lower level and goes week to date negative, that may well establish a bit of a near-term trend for the market. This FI and DI number, I think the DI number is something to take note of, as Sonia also pointed out, because in the medium term, that's more of the savvy lot. And you have seen in the past, they've got the medium-term direction better than the FIs. So that's something to worry about. Yesterday, selling 400 crores in Lupin, more worryingly, 300 crores in ICICI Bank. And ICICI Bank is again coming back and giving problems to the market. What could help market? Two stocks. One is Reliance, of course, that's taken over leadership, and the other is Larsen & Toubro. These two now become the most important earnings for the market. Reliance, of course, would deliver only after market hours. The other trend changer today could be Axis Bank's numbers that would come during the day, and the asset quality is something. So that's something that we'll be watching out for. But more than the cash market, for last 2 or 3 days, the F&O data was indicating that the volatility is going to persist. Today, the F&O data is indicating that yesterday's dip was not bought. Today's F&O data is indicating that the bearish stance may just continue in trade today. There was selling of almost 600 crores in index futures, and open interest went up. I was looking at the internals. The short open interest from FIs in index futures actually went up. So that's creating fresh short positions. Now, 5 days ahead of expiry, if you create fresh short positions, that's not for 30 or 40 points. That's because you are expecting a 100, 200 point kind of dip. Okay. So that's something to worry about. The other data point that was interesting was the kind of option selling that we saw, and a lot of call writing and a lot of put buying at 8,500 and 8,600. So the sense I get is that this market may grind. It may not collapse, but may grind lower towards 8,400 by expiry. If, however, today again you take out 8650. 8650 is the level to watch out for now. If you take out 8650, I mean if the morning dip is bought, then of course the market is back to the bulls. But for now, the data is indicating that there's a bit of a bearishness, and as we've been saying, the risk reward does not favor the bulls at 8600, 8650, and that's there in the numbers as well.
That's true. And also, I just want to mention that the profile of stocks that have fallen this week makes you a bit cautious. Sun Pharma, Lupin, all down 12% this week. Axis Bank, TCS. I mean, you're used to seeing some of these metal stocks, infrastructure stocks collapse. But when best-in-breed stocks fall, it starts to worry you.
Yes, Lupin's fall was particularly worrying. I think TCS fall is worrying. ICICI Bank, of course, is again heading back towards 300. And I think one more point, Sonia, yesterday also intraday the mid-cap index made a new lifetime high. Make no mistake, if the Nifty goes towards 8,400, you will see some damage in the mid-cap space. So that's one space where you have to be careful. Don't overstay your welcome. If you're getting good trading money, take your profit.
All right, it's Friday, guys. So let's kickstart the show on an optimistic note and tell you what you'll get to see in the next 2.5 hours. The rally in Indian equities was punctured by a poor performance of some